All right, guys, here we go again with another of our Evolution Consulting market update videos. This one being recorded on the 25th of August, about 5 o'clock after trading hours. And for those of you that are either in JNUG or NUGT, you probably may have been surprised this morning. I know I was. Guys, to talk about, given the amount of research that we do, sometimes the glaringly obvious will escape us. And believe it or not, today was one of those cases where the glaringly obvious escaped us. Okay, we forgot that there, and actually I shouldn't say we forgot, we just didn't notice, we didn't read, that the Direxion fund managers, or the fund management company that provides NUGT and JNUG, was going to split the shares down and consolidate. And so I woke up this morning and saw a $20 share price on JNUG, NUGT and JNUG, and I thought I was about to have the shittiest day of my life. And I happened to glance over at the messenger platform that I use. One of our clients, one of our customers, kind of went like, "What the hell was that?" And then we both, at the same time, we kind of looked and went like, "Oh, okay, it's a split." And guys, we didn't realize that. It escaped us. Hey, we're going to screw up every once in a while, okay? We try not to, but it's going to happen. And we're okay with that, especially when we're doing stuff as cutting edge as we are with Evolution 4.0 and Evolution soon, Evolution Ultra. We're very excited about that. We'll mention that in a little bit. But nonetheless, for those of you that that are long those positions, again, stay long, man. It was a nice recovery today. It was 9% on JNUG, I think it was. Almost 10% on the upside. Okay, so those are starting to recover now, guys. Just as a heads up and as a general rule, almost, okay, those share prices now down around $20 or so. Okay, we're talking about almost USLV kind of pricing now. All right, that's going to make those very attractive now to a much wider audience. Okay, or a much wider range of traders. $200 and some a share, that's not within reach of everybody. Okay, and we understand that. We recommend them, but we understood that at $200 and some a share, that is a pricey equity by comparison of some of the other stuff that's out there. But at $20 a share, guys, there's a bonus associated with that. And you say, well, what could that bonus possibly be? With that now around, with JNUG and NUGT trading around the $20-some mark for now, we'll see how long that lasts. But at current share prices, guys, any of these catalysts, any of these news events that we get, that means, in addition to institutions, obviously $200 a share is nothing for an institution, or for super wealthy individuals, $200 a share, that's kind of like it is what it is kind of thing. But for retail investors, certainly, and some of the folks I've been talking to on the messenger platform that I use, they're like, hey, this is great, $20 a share, fantastic. It's going to magnify the effect of geopolitical catalyst events, I should say. It means that retail investors can pile in, so the price action on those at current levels, okay, is going to be pretty damn dramatic, because it's going to be all the fun and excitement and the volatility associated with NUGT and JNUG, and it really applies to any of the triple leverage stuff. It's going to be all that fun and excitement, plus now it's there's going to be a booster effect on the retail side. So that being said, that's a wonderful thing. So and I know, guys, and one of the things I did want to mention in this video, and the primary thing I want to talk about in this market update video is, amongst other things, is trading psychology and just how important that is. Okay, I joke around sometimes that it's not a joke. Okay, I say I was thankful to have removed emotion from my world. I don't have any emotion. That is true. I'm very forward about that, guys. I really don't. Okay. Some of that has to do with my own personal life, and a lot of that has to do with the development of the program. But I'm very honest and very forward in saying that I do not have any emotion, and you cannot have any emotion, or you have to have minimal emotion to be able to trade this market, okay? Because I will tell you this now. This market, the volatility, especially when you're dealing with gold and silver, guys, okay? We're talking about a geopolitically manipulated, a governmental manipulation, just all sorts of manipulation on a metal because of its significance in geopolitical power, the distribution, and the wielding thereof. Okay, we're talking about converting, the planet over to a new financial order, and if that phrase sends chills up and down your spine, well, too bad, so sad, friggin' deal with it. Okay, But the reality is we're seeing, with the Shanghai Gold Exchange and the City of London and the significance of that event, which we'll talk about in a second, but this market is going to rattle you a little bit, okay? It's going to test you. And the reality is the whole thing that we're trying to convey is please, 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 if nothing else, make sure that these triple leverage ETFs that we recommend. And by the way, for those of you that subscribe to Switch and Signal, okay, we're starting to recommend some of the single leverage stuff in there. We want to provide, at the very least, an analysis that maybe appeals to a broader range of investors. Okay, I talked to some guys on the Messenger platform that I use, and they're younger guys, and they're brilliant. They know who they are. I'm not going to mention their Twitter handles. I'm not going to mention them by name, but you guys are doing great. They have the luxury of being young. They have the luxury of being able to maybe assume more risk than somebody with different investment goals. But more importantly, one of the things that made me smile is the fact that they're really kind of getting on with the psychology. And that's what I say so often is this is not a market for emotional traders, guys. you check your emotion at the door, because especially when you're trading that triple leverage stuff, you're going to have those 5%, 10%, down days. You're also going to have, as we can see today, you're going to have 10%, 20% up days. And the idea is to just remain singular in your goals, okay, which is convert paper into more paper into metal. All right, so as far as trading psychology goes, guys, if you're easily rattled, if you're easily shaken up, if you're going to look at the screen and you're going to see it's a 5% down day and you're going to go, stop it. That's what I'm going to tell you to do, okay? Stop. Either trade single leverage stuff or don't trade at all, because this market is it takes people with a self-sabotaging mentality and it eats them for breakfast, lunch, and dinner. All right, if you're unsure of yourself, or you doubt yourself, or if you're just a naturally self-sabotaging person, stay far away, because this market it'll annihilate you. It just will. Okay, so that being said, we move on to metals, and we see metals down, gold specifically around the 1320 some mark, and we go, what the hell happened? Okay, speaking of what the hell happened, all right, and that is, guys, the last ditch, the last desperation attempts to really suppress metals. And we got the G20 coming up, we got the Jackson Hole meeting coming up on Friday, all right, where crippled Janet Yellen, if I could sound like Trump for a second, put a nickname in front of somebody, crippled Janet Yellen, that the big banks and the hedge funds, and I think just about everybody's just about had enough of our shit, okay, and I've said that before, gets to babble on for a little bit, and then announced in an indirect way that there's not going to be a rate hike until December. And I'm going to see if, guys, I'm going to play a little game here. I'm going to see if I can get a direct quote. Now, if I get this quote direct or real close to it, somebody's got to buy me a beer. I don't care who. One of you guys out there in Twitter finance land or who watches these videos, you can owe me a beer. So I'm going to see if I can get a direct quote. Despite the reduction of near-term risks and the removal of near-term risks from the table, we're still cautiously and guardedly optimistic about the U.S. economy. However, we do not want to raise rates in its current fragile state, pending European geopolitical conditions. Something to that effect. If I'm close on it, you guys can be the judge on that. All right, but long story short, guys, here's how it's going to go. It's going to be, hey, everything's great, but we're not raising rates. Moving right along. That's, I could be a Fed chairperson. I just get it done in 15 minutes. It'd be easy. But nonetheless, guys, we did take yesterday off, and speaking of metals and speaking of the repression of metals, all right, because we're going to talk about the Shanghai Gold Exchange in the City of London and a new trading desk that they're setting up, which may as well be God Almighty comes to this planet as far as economics go. But even when I do take a day off, do I think of the folks that watch these videos, and do I sit at the bar and my idea of a good time, all right, while drinking my El Presidente margaritas, all right, I made a list. For those of you that are wondering, has gold topped? Is that the end of the gold bull market, etc., etc.? So I made a list. I was sitting there, and oftentimes I do my best thinking while sitting at the bar by myself. Believe it or not, watching CNBC. It's my idea of fun. Deal with it. But I made a list, and it was supposed to be one side of a page. You can see what I did here is I don't know if you. There we go. You can see my handwriting got progressively worse as I was more margaritas into the day. But I made a list, and this, you can see it's divided down the middle of the page here. And the reason it was divided, I was going to make a list on this side, okay, of reasons the gold bull market hasn't really even gotten started yet, and then I was going to put on this side here, okay, and this was going to be reasons that we may have seen the end of the gold bull market, or maybe it's just a complete speculative trade and it's all getting blown out of proportion. But this side and this side both turned into reasons that the gold bull market hasn't even really gotten started yet. And then I went on the back and I did the same thing here. And so what I started is I said, I'll just use the back of the page for maybe, I'll come up with some reasons that, metals are just going to continue to dive in price. And no, over here you can see I just kept going with reasons that the gold bull market hasn't really even gotten started yet. Now over here, these two, okay, that's reasons as to why that, maybe we have seen the top of the metals market. I'm just going to read some of them out here, okay, and one of which is how do we know that, or how, based upon our information from Evolution 4.0, how do we know that, metal spot prices are going to continue to increase? And, okay, we take a look and we go, we got China hoarding tons of gold. Now, clearly they're doing that for a reason, okay, given that they now control the Shanghai Metals Exchange and get to really kind of do price discovery or have price discovery on the currency that's ultimately going to be backing their metals. We got Russia. They're hoarding tons of metals, okay, and they're not doing that because they're bored. There's obviously a grander plan going on over there. We have ZERP and NERP becoming a more widespread kind of modus operandi for central banks, because print to infinity at this point. I mean, guys, we called it back in 2014. Okay, I'll just tell you the way it is. We call it the round robin effect. Okay, Bank of Japan, ECB, U.S. Fed. Bank of Japan, ECB, U.S. Fed. Okay, it's one print they all have to print. Okay, otherwise it all comes crashing down. So. Let's see. We have that's right. We have Russia and China both expressed interest in metals backing their currency. Brexit, by the way, that was the beginning of a unified, or is the beginning of a unified metals trading desk, as we so accurately forecasted. And they will wield about 80% of the power, or 85% of the power, when it comes to price discovery on metals. All right, and we have Trump's economic team, as we forecasted. They've already kind of openly suggested going back to a gold-backed dollar. We're still standing by the Evolution 4.0 research indicating that he's going to mention that at some point in time during the debates, and when he does, you will want to be long metals. Okay, and I'm just kind of skipping around here at the moment, but... yes, speed of transactionary business is going to require a serious consolidation, or at the very least, a unified global currency system, and that is what we're moving towards as we speak. Right, so here we go. That's, and I can do this for the next 15 minutes reading these things off, and now I'm going to go over, just so this is a fair and balanced, as they say on Fox News. Here are things that might prevent the gold bull market from continuing, or might prevent gold from increasing in spot price valuation and ultimately purchasing power. There's only two: Fed manipulation and ECB manipulation. That's it. I don't know what else to tell you. Okay, I have no personal interest, nor does Evolution Consulting have a personal interest in any metals brokers and any metals dealers, okay? And I know there are guys out there that do, and that's fine. I don't have a problem with that. That's fantastic. It's just we choose to have our information that we share be our primary and our only product, and there's a reason for that, okay? We pick something and we're good at it, all right? The reality of the situation is, guys, there is so much upside potential for the metals, okay? And the way you can, and again, JNUG, NUGT, USLV, SLVP, any of that stuff, that's not metals investing. That's using the natural manipulation, the natural leverage, okay, on the markets, all right, to create a means in which to go out and buy more physically good delivered metals. And, I get a hard time sometimes from guys on Twitter, okay, and they'll say, well, what do you mean? You said there wasn't going to be a correction. It was a correction. Again, it goes back to the same thing I've said, guys. There's only one way for metals to go at this point, and that's up. Delaying the inevitable is just going to make those runs more brutal. Delaying the inevitable run on spot pricing of metals is just going to make those runs more dramatic. They're going to run to higher levels before the inevitable little pullback happens. Okay? So really what the Fed and ECB, and to some lesser extent the Bank of Japan, what they're doing, guys, is delaying the inevitable. And again, don't act surprised when you get mowed down by the freight train. That is the new financial system. That's what they're doing, and it's delaying the inevitable. So that being said, guys, again, these triple leveraged ETFs and these triple leveraged ETNs, okay, It's just a very easy way to convert paper into metals. Ultimately, the idea at the end is take some of your earnings and go buy physically good delivered metals, okay? Because again, that's something we talk about called purchasing power, all right? It's not going to matter what, gold is worth compared to the dollar when there is no dollar. It's not going to matter what gold is worth compared to the pound sterling when perhaps someday there is no pound sterling, or the euro dollar, forget it. It's not going to matter, all right? It's about having the physically good delivered metals. And if you want the real gory details behind that, guys, I encourage you to purchase the Grant Street Notes metals investing, guys. We have metals investing guide. Try that in English. We have already gotten some really, really nice reviews on that. We've had some folks say, wow, that's, it's been a real eye-opener. And that's the point. That's why we do that kind of stuff, guys, all right? So the point of the story, though, again, current levels, keep loading up. Because you have to understand, if you look at the spot valuations of metals, and you look at, the way that some of those triple leveraged ETFs have been performing, it's really a next level up type of thing. We can remember when gold was trading, 1100, and we were all going berserk. I was on Twitter, I was going berserko. Gold went to 1100. Woo! Gold went to 1200. Woo! Then 1300. Holy crap! And it almost touched 1400. Well, guess what, guys? In another month or two, we'll be going. Oh, remember when it was trading at high 12s? Low 13s. Holy crap! It's at 1400. It's at 1500. Those are those next level up kind of things, okay? And now, again, and I've talked about this very openly, and I've been very forward about it, in saying that this is the other side of a transference of wealth. A lot of people are conditioned to buy low and sell high. You don't do that with metals. You hang on to them, and you let all the fiat shit collapse, okay? And you're left holding the thing that's ultimately going to back the next financial system, the next financial order, okay? So by driving metal spot prices down, all right, it encourages people to sell off, going, I want to avert future losses. Great. You know what you're doing? You're creating supply for those that know in advance. You're selling off your physically good delivered metals, okay? Now, the other side of the wealth transfer starts, all right? And it's going to happen soon. All of a sudden, they're going to start running the spot prices up, and that's going to be the Shanghai Gold Exchange, because they can, all right, to put it quite bluntly, they can. They'll run the spot valuations of metals way up, and guess what? People are going to sell because they can say, oh, back in the 90s, I bought gold at A, B, or C, or, I got gold at 800, 900, 1,000. Yay, I'm going to sell it off now for 2,000. That's called a fool's rally, all right? We talk about that in the Grant Street Notes guide. Don't do that. So the idea is to create the supply. That's what's going on now. That's how you transfer wealth. You have to create. If there is something you want, and it's held privately, okay, you have to create the circumstances that will lead to the creation of supply, and that's what a lot of this price manipulation does as well. From the Federal Reserve, the ECB, and the the COMEX and all that, it's just they're desperately trying to save the U.S. dollar and fiat currencies and so forth. And very soon, guys, somebody mentioned it recently. We're going to do a video talk a little bit about the petrodollar, okay, and how that's significant in what is ultimately the de-dollarization of the the global financial system. You talk about the SDR, world reserve currencies, etc., etc. But we will get to that at some point. That being said, guys, again, we're a little all over the place with this market update video, but it's really, at this point, especially for the foreseeable future, guys, it's all about trading psychology. I'm going to share what I can from the Evolution 4.0 system. What I did want to mention earlier is, thankfully, we have been approved by our interested parties, okay, to go ahead and build Evolution Ultra. As you can see, we're actually assembling a workstation here. It's getting bigger and bigger by the day, all right, to accommodate what is going to be an absolute monster of a system. We've just started to really kind of compile the hardware list and kind of get everything together to see how we're going to put the system together and what it's capable of. I'll be the first to say Evolution 4.0, you can bitch and whine, and like I said, there are a couple of guys on Twitter, oh, your system's BS. It's like, I like having the luxury of being able to just send a link, a proven forecast, and it's really my polite way of saying, deal with that. But as far as the Evolution Ultra system goes, guys, I will be the first to tell you, and this is not just me, but the rest of the Evolution development team, we have no idea what it's capable of. We don't. We'll be the first to say that it is a very, very, very souped up, hopped up version of Evolution 4.0. We've tested just a few of the Ultra algos on the 4.0 hardware. As a matter of fact, if you guys have been purchasing Wirehouse, the most recent edition of Wirehouse, the August edition. We put some stuff from Ultra in there, which we ran very briefly because it was just like instant overheat. Like, whoa, okay, we'll just wait to do that. So we're excited about that, guys. We start putting together Evolution Ultra. We'll keep everybody posted. And again, we have no idea what that system is going to be capable of. That being said, guys, we look forward to sharing some, but not all of the information from Ultra, with you guys, and certainly our corporate and our paying clients, But that being said, of course, guys, as always, questions, comments, bitches, gripes, moans, or complaints, please save the bitches, gripes, moans, and complaints, because I really, much like Phil Collins, truly don't care anymore. But, of course, if you want to email us, it should be somewhere over here. info@evolutionconsulting.world. info@evolutionconsulting.world. All right, and, of course, if you want to follow us on Twitter, it's @evo_consultants. @evo_consultants. All right, we post some of our day-to-day stuff on there. And, before I forget, special thanks to Dr. Janda, who is going to, who I should say has invited me on as a guest on his Operation Freedom radio show for about a half hour. It's going to be October 9th, and probably talking about precious metals on there. We're going to do some research specifically for his show. Okay, and it's an honor to be invited on there. I mean, he's got a guest list that's pretty much a who's who of the, I guess if you want to call it, the non-corporate media. So we're pretty damn excited about that. So we'll, you guys will tune in and have a listen to that. And, I said, just when you thought it was safe to go near technology, we're seizing control of the airwaves again, or at least for a half hour. Guys, as always, thanks for watching these. You guys have been great. You guys have been motivating the hell out of me to keep doing these. And I am very thankful for. Okay? So, as always, be good. Everything really is a transaction.